European stocks and U.S. futures fall while oil and gold are up after Ukraine reported that Russia fired an intercontinental ballistic missile overnight. Well, Nvidia fails to meet the high bar set for the outlook. The chip giant says shipments of its highly anticipated Blackwell product are on track. Plus, Adani shares and bonds tumble after U.S. prosecutors charged founder Gautam Adani with participating in an alleged plot to bribe Indian government officials. Adani Group denies the allegations. Also later this hour, a conversation you don't want to miss. We speak to legendary investor Carson and his latest short position. We'll also hear the pushback on this call. Now, first thing is first, let's take a look at the European markets map. It's definitely geopolitics that's driving a lot of the equity markets, but also the bond market. I would like to point out that Bitcoin is at 97,000. So we'll do cross asset in just a second, but you can see Europe definitely on tenterhooks. The DAX, the CAC down some 0.4%. The FTSE is also seeing a bit of pressure when it comes to the FTSE. The IBEX and the DAX are pretty much unchanged. Again, we got through. We're still expecting a nomination, of course, for the Treasury Secretary of the U.S. We got through the election, but it seems that a lot of the risk is now given what's happening in Ukraine and Russia. Let's also look at 10-year yield. I think we have cross asset. If not, we'll get it up for you in just a second. Treasury yields, again, edging down ahead of this release of U.S. initial jobless claims. Investors continue to wait for President-elect Donald Trump's picks for his cabinet. The 10-year yield, 4.4. And then when you look at euro-dollar, 105.38. So for the conversations that matter and the insights you need, let's get started.
Newsmakers and market movers. This is The Pulse with Francine Lacqua.
Well, good morning, everyone, and welcome to The Pulse. I'm Francine Lacqua here in London. Nvidia, the chip maker at the heart of the AI boom, down pre-market after its revenue forecast actually failed to meet Wall Street's highest expectations. Now, during the earnings call, the chief executive, Jensen Huang, assured investors that the firm is on track to meet high demand for its hotly anticipated Blackwell chip.
We will deliver this quarter more Blackwells than we had previously estimated. And so the supply chain team is doing an incredible job working with our supply partners to increase Blackwell.
Well, Tom McKenzie, Bloomberg Daybreak anchor, now joins us. Tom, so if you look at what they're saying, Nvidia is saying that the new chip is on track. Are they disappointing because forecasts were expecting too much, or are there question marks about the fact that they could disappoint going forward?
Yeah, I mean, I think to your point, look, was this a blowout set of results? No. Was it a miss? Absolutely not. And in terms of that demand, they see that progressing for the latest chip, the Blackwell, into the next quarter, so into 2025, pretty comfortably. The question really is whether they can meet that demand. So let's go back to the quarter that they reported on. It was a beat in terms of the earnings, around $35 billion US, above the average estimates. And then in terms of the current quarter, so looking ahead to the current quarter, 37 billion is what they're looking at. Now, that's not at the top end of the range. Some had expected 41 billion, but it was above the estimates in terms of expectations for the current quarter. If you're looking for potential flies in the ointment, then maybe it is around the margin story, and you touched on that. The margin did soften a little bit and is expected to soften in the current quarter. But again, executives think that will turn around again next year. And then there's a question about whether or not they're overly concentrated in just a handful of customers. And the concentration actually has increased when it comes to their exposure to some of those hyperscalers, so Microsoft and Amazon.
Okay, Tom, thank you so much. We'll, of course, keep a very close eye on everything that's happening with Nvidia and the impact it also has in Europe. But Tom McKenzie, now Treasury yields edging lower after surging since mid-September. This comes ahead of U.S. initial jobless claims data a little bit later today. So let's bring in Themis, Themistocleous, the Chief Investment Officer for EMEA at UBS Global Wealth Management. Themis, when you look at the three main questions, which is frankly what Tom was saying, which is where AI goes and what that means for valuations, what the Trump trade means and what that means for the economies and geopolitics, what do you think that the markets will latch onto in the next couple of weeks?
Thanks, and good to be here. So, obviously, all very relevant questions. On artificial intelligence, I think what is important is to look through where is that technology going and where the opportunities are. And obviously, through that journey, there can be volatility. But the way we look at it, is that this is a multi-year huge opportunity, trillion-dollar opportunity. And if you look at the large cap companies, they're still spending heavily on artificial intelligence. CapEx is 50% up this year, next year another 20%. And obviously some of the enablers around semiconductors, artificial intelligence chips, and also data centers are likely to be benefiting from that. Obviously, as the previous speaker said, there will be occasions that expectations tend to run away from reality, and then you could a little bit of volatility. But this, for us, is a key opportunity in the market, not just for now, but for multi-years. And this is where we see a lot of earnings potential continue to support valuations.
So, Themis, I mean, what do you do with Bitcoin? It's at 97,000. If this is going to be a linchpin of actually the American administration, do you have to look at it, or can you still just do equities, bonds, currencies, and leave Bitcoin to one side?
Sorry, I missed the question.
So the question is on Bitcoin. What do you do with Bitcoin, as we understand that Donald Trump is a very much proponent of Bitcoin, even a lover of Bitcoin?
Yes, our view on Bitcoin is, remember, we advising private clients. And for us, Bitcoin is not something you can value. It's not like a company where you can look at the cash flow and then discount it back. And it's a concept. Is it an asset? Is it a currency? We don't think it's a currency. Is it an asset? I can see why people can put a speculative investment on that. When we look at it from a portfolio perspective, it's an asset that, if you call it an asset, is very volatile, and we think you can have in your portfolio other hedges like gold that over time prove to be a much more effective hedge and with lower volatility. So it's not something that I can understand why people can have a small part of their portfolio, very small part of their portfolio for speculative reasons. But for us, it's not an asset that we can recommend to our private clients.
Okay. Themis, when you look at what's happening in Ukraine, there seems to be an escalation. We don't know where it ends, but it's definitely moving stocks, it's moving bonds. How much volatility do you expect that to bring?
Yeah, geopolitics always has the potential of introducing volatility in the market, and we've seen exactly what's happening in Ukraine. At the end of the day, the way we look at geopolitics is to try to always keep a focus on how is that going to impact the economy. And again, if we look at Ukraine, Middle East to a large degree, the transmission mechanism is often through oil in both cases and some of the other commodities. And that's why when we look at geopolitics, we have been advising our clients to include oil into their portfolio or derivatives of oil to be able to hedge against potential volatility relating to geopolitics. And that's the main mechanism through, and we saw this morning the reaction in oil, basically. But that has the potential, and it's not surprising in some ways ahead of the President-elect Trump taking power. It's not surprising that we will see escalation, potentially Ukraine, and we could see something similar in Middle East.
Themis, when you look at some of the bond movements, I mean, there's an expectation in the market that the bond vigilantes will keep in check what Donald Trump does on trade, on tariffs, but also on taxes. What does it mean for your appetite for treasuries?
We actually think the market is going to be too far, at least for the short term. Clearly, what you mentioned is going to have an impact on term premium. But if we look at where yields are, they seem to be implying very few cuts in the next year and a half. We think with inflation still coming down, there should be support for treasuries and also in credit. We see opportunities in investment grade as well. So we do see opportunities in that space. Volatility, again, will come and go, but underlying the inflation is still coming down, and there will be opportunities for the Fed to cut, and that should be supportive.
All right, Themis, thanks so much. Themistocleous, they're the Chief Investment Officer for EMEA at UBS Global Wealth Management. Now, in the last couple of minutes, we have a couple of breaking news from Russia, from the Kremlin, but also from Commerzbank. We now have a new Chief Financial Officer at Commerzbank, Carson Schmidt. So he's going to succeed the now Chief Executive, Bettina Orlopp, who was Chief Financial Officer, who was promoted to CEO. So there was a vacant place. The handover, we understand, is planned to be completed by the spring of 2025 at the latest. Now, Carson Schmidt joins from Danske Bank, where he's been Executive Vice President of Group Strategy and M&A. Coming up, U.S. prosecutors charge the Indian billionaire Gautam Adani with bribery. The conglomerate denies the allegations. We're live in Mumbai with the latest next. This is Bloomberg. Welcome back, everyone. The conversations that matter, the insights you need. This is a Pulse. I'm Francine Lacqua here in London. Now, just moments ago, again, we're keeping a very close eye on everything that's happening in Ukraine and Russia. The Kremlin has said that the Storm Shadow attack at Russia is a new escalation. That's according to the TASS news agency. The spokesperson for the Kremlin, Mr. Peskov, says Russia is holding responsible position in the conflict. I think from the other side, we haven't had full confirmation that some of these weapons were actually used. But Ukraine said that Russia has also launched this intercontinental ballistic missile during an attack on the country following Kyiv's strikes with Western-made weapons inside Russian territory. So this was overnight. So you can see this actually escalating bit by bit. It did appear to be first reported use of the missile designed to hit targets thousands of kilometers away since the beginning of the war. So we'll have plenty more on that throughout the day. When you look at what we've heard in the last 24 hours, embassies of the U.S., but also some European Union countries in Kyiv, for example, we know temporarily closed on Wednesday in anticipation of a major retaliation missile strike after reports that Ukraine used these U.S. supplied ATACMS and UK-made Storm Shadow weapons against Russia. So this was just the latest from the Kremlin, saying that actually this feels for them an escalation. Let's bring in our news director for the EMEA region, Ros Matheson. Ros, so good to speak to you because there's a lot going on. It's like a tit for tat. Is this full escalation?
What we're seeing is that posturing from each side. What they're trying to do is get in the strongest position for the possibility of negotiating an end to this war or a ceasefire in this war. So they're escalating to potentially de-escalate. So we're seeing Ukraine obviously now firing Western-made long-range missiles over the border into Russia, though just into that border area. We're now seeing that Ukraine saying this morning Russia's fired an ICBM at Ukraine, possibly the first use of an ICBM in this conflict, a new type of weapon. And so each side is escalating, and they're also on the ground trying to accumulate as much of each other's territory as possible. Russia is pushing aggressively on the ground inside Ukraine. Ukrainian forces are still fighting inside Russia because they want to use that as a bargaining chip if they get to the table. So it is escalating, but it's probably about getting towards a negotiation. Of course, the danger is when you escalate, you could accidentally or inadvertently push things too far. So it's like, it's risky, of course, and could it go the wrong way? Absolutely.
Okay, Ros, thank you so much. Many more questions, actually, as we try and figure out exactly what happens next. Bloomberg's Ros Matheson. Now, entities in the Adani conglomerate, such as Adani Energy, Adani Total Gas, and Adani Power, says no allegations have been made against them by the U.S. Department of Justice. Now, shares in Adani Group companies have been tumbling after U.S. prosecutors also charged the founder, Gautam Adani, with participating in an alleged bribe plot. Now, the conglomerate has also scrapped a $600 million bond sale. Adani Group denies the allegations and says they will be seeking legal recourse. Now, for more on all of this, let's bring in Sanjay PR in Mumbai. So, Sanjay, what exactly is the latest on this? How bad could it be?
So Adani Group has clearly denied all those allegations made by U.S. prosecutors, and they've said, they are going to seek legal recourse on this one, and they are also seeking legal advice because the jurisdiction is different. And very interestingly, all companies have come out with a denial statement. They saying that there's nothing against the company per se, Adani Green Energy Limited or Adani Power Limited, be any of these group companies. There's no direct allegation made by the U.S. prosecutors. That's what the companies are maintaining the stand, and they are saying that they will be seeking the recourse and they will be finding a way. They will be seeking advice from the right people, and they will be taking this ahead. So, and they are clearly saying that they compliant to the rules, and they will remain to be compliant, and they are cooling off all stakeholders, partners, investors, etc. by this statement. But it's slightly late, and we are expecting a detailed one. But they've chosen to have a brief statement to deny these allegations made by U.S. prosecutors.
All right, thank you so much for the briefing, Sanjay PR in Mumbai. Coming up, a COP29 UN Climate Summit has released a draft deal that includes at least $1 trillion in financing. Rachel Delacour, Chief Executive Officer at Sweep, a sustainability data management platform, joins us next, and this is Bloomberg. Well, the COP29 UN Climate Summit has released a first draft deal on which puts at least $1 trillion of financing on the table. Yet key details on where the money will come from still need to be ironed out. Well, Rachel Delacour, the Chief Executive of Sweep, a sustainability data management platform, joins us now. Rachel, thank you so much for being with us. So when you look at the Trump election and actually the key positions that he's filling right now, and he's going very fast, what do you think it means for climate goals for countries and for companies?
It can definitely slow down the signals about, taking care of the planet and decrease, our global emissions. But I really think, I'm working every day with customers, large-scale customers who are telling me, whatever the color at the White House, whatever, what needs to be, voted or else, we need to make our companies, last forever. The CEOs of companies, they are on a mandate to make sure that their companies are lasting forever. And for that, they need to transition to that low-carbon economy, whatever policies, politicians, are saying on the go.
Of course, that would be our aim. But do you already see companies being less interested? Because not only do they not have to do it because it's not encouraged, but they actually worry about a backlash, especially if you do business in red states?
I think, I'm from Europe, and what I hear from my customers and from also U.S. companies doing business in Europe is there is two threats, when it comes to not transitioning to that low-carbon economy, not being on your ESG mandate. There is two threats. There is the regulatory threat and there is the reputational threat. So the backlash or else, at the end of the day, what they are saying, what they are telling us for those who are advanced in their journey, in their climate strategy journey, and we are the tech strategy to that, to measure the outcomes. But what they are saying is we are already seeing an ROI of it. We are seeing an ROI on our top line, on our bottom lines. We have access to a cheaper cash. We are able to renew much more markets, much more. Our RFPs are able to be much more successful to get access to new markets and to renew ones. So, what I'm hearing from the on the ground from businesses is, and for those who are even the U.S. companies operating in Europe, they must align actually with what the world is telling them. We are all living in this finite resources world, and it's a matter of competing. It's a matter of ROI at the end of the day.
Yeah. So, Rachel, you seem to think that actually the Trump election will make no difference in terms of climate reporting or tracking.
I think that we have to be absolutely vigilant on what will be done exactly. But regulations like CSRD in Europe, applying also to companies who are whatever their headquarters, who are doing business in Europe. That CSRD, that playbook to be more sustainable is, the shot has been fired. Actually, they will have to comply to this. They will have to apply that playbook. They will have to report and be compared to their peers. So, we may think about that I would say slowdown in terms of sustainability, but even if the regulation could be potentially slowed down, okay, still, CSRD in Europe has already been fired, and the reputational cost of not acting, is something that companies must absolutely understand and act on it. This is really testimonials that we have from companies.
Yeah, and this is 100% the right thing to do. A lot of companies say it still comes at great expense. Is that a disadvantage for Europe?
It's not a disadvantage for Europe. I think that Europe is really leading the way in how companies have to be sustainable, and that playbook that we are doing, that Europe is giving to companies to organize, to harmonize the way they are gathering their carbon emissions KPIs, their ESG KPIs. It's that comparison is actually asked, by the consumers. Is actually asked by the planet. And what I mean is that at the end of the day, there will be winners and losers. So it's about competitiveness. It's about profit. So yeah.
Rachel, thank you so much. Rachel Delacour, their Chief Executive Officer of SWEEP. Coming up, we talk to the ECB Governing Council member, Yannis Stournaras. This is Bloomberg. Well, good morning, everyone, and welcome to The Pulse. I'm Francine Lacqua here in London, and these are your top stories. European stocks and U.S. futures fall, oil and gold up after Ukraine reported that Russia fired an intercontinental ballistic missile overnight. Well, Nvidia falls in U.S. pre-market after failing to meet the high bar set for its outlook. But the chip giant also says shipments of its highly anticipated Blackwell product are on track. Plus, Adani shares and bonds tumble after U.S. prosecutors charged founder Gautam Adani with participating in an alleged plot to bribe Indian government officials, while Adani Group denies the allegations. Now let's talk monetary policy for a change. My next guest warns that the U.S. tariffs could weaken European economic activity and lead to recession and deflation. Now, all of this comes as President-elect Donald Trump threatens to impose 60% tariffs on China and 10 to 20% on the rest of the world. Well, I'm delighted to be joined by Yannis Stournaras, the Greek Central Bank Governor. Governor, thank you so much for joining us. We also had a great conversation in Athens on Monday, where you really talked to me about, expectations for inflation, growth, and the Trump tariffs. I mean, do we at Bloomberg Economics estimate that actually these Trump tariffs could roughly take around 1% off euro area GDP at already a time of difficult economic performance? Is that your assessment?
Yes. This is a reasonable estimate, I'm afraid. Yes.
So it could actually, could it even push the European Union in a recession?
Well, if you take into account now that our growth forecast is for about 0.8%, if you take out 1 percentage point, we might enter into a slight recession.
Governor, you were very interesting also giving a speech yesterday, talking about inflation where you're expecting to hit it for 2%. What's the right way of looking at economics now? Do you have models, without talking about tariffs and Trump? And do those need to change when we have policy, or you already need to try to incorporate it in your forecasts?
You mean the tariffs?
The tariffs, yeah.
Yes. Well, first of all, we have to wait until the new president takes office, sits down with his advisors, and we'll see what they have to say, because now we just have what he has said during the election campaign. But we know from experience, we know from economic theory, from practice, from 200 years experience, the tariffs are never a first best policy. Whatever you can do with tariffs, you can do it in a much more efficient way and cheaper way by other means. by domestic taxes, if you want to support your industry, by a set of taxes cum subsidies, but not tariffs. Do not interfere with trade. This is the dictum of economic theory and practice and experience of many, many years now.
Is there anything that Europe can do to defend itself against tariffs?
If somebody imposes tariffs, you must retaliate, I'm afraid. So this is going to have second-round effects, because nobody will stay quiet if somebody imposes tariffs. But of course, we need very careful thought here.
Governor, when we spoke on Monday, it seemed that a 50 basis point cut is off the table for December. Is that also
I cannot say whether, because we discuss these things very carefully in the Government Council in very good spirit. But it's my own assessment is that 25 basis points now, perhaps, is the right response. After all, we still don't have anything on the table on the other side. We don't know how markets react, what the Fed will do. So I think 25 basis points is the right response now. But later, we can see.
So, Governor, when you look at, given all of these complexities, do you want to hit a swift return to normal? And so does that mean that we would have a cut almost at every meeting until you get to 2%, which is, I think, where you see more or less a neutral rate?
As inflation develops now and as the real economy develops now, I think, yes, we should have a cut in every meeting from now on until we get to what we call the neutral rate.
And that is 2% actually in your eyes?
And that is 2% according to, of course, as I said on Monday, this is an elusive concept, but according to the estimates, it's about 2%, 175 to 225. But on average, it's about 2% in the long run.
And Governor, do you see any need to go into expansionary territory?
You mean even below 2%? Well, it's very early to say. Very early to say. If the worst comes to the worst and we have a hit in European activity, maybe. But it's very premature to say now whether we should go to an expansive territory.
So this would mainly depend on geopolitics and Trump trade tariffs?
Well, no, and the domestic policies as well. It's not only foreign policy. It's also the domestic policies in Europe that count.
What do you worry about the most in some of these domestic policies? Do you worry about the election in Germany and the instability that brings?
Well, the ECB issued a financial stability report in the last few days. We described there all the financial risks. We worry about public debt. We worry about financial stability. No. If the worst comes to the worst, if there is a trade war, yes, there's going to be perhaps chaos in international trade that will affect financial stability.
Governor, when you look at inflation, I mean, if you talk about it, very precisely, has the risk of undershooting the inflation target become a bigger risk than overshooting it?
There is some risk, although now risks are, I would say, neutral as far as inflation is concerned. Okay, we had 1.7% in September, yeah, and then back to 2% in October. Well, I think that now we are going to hit the inflation target on a sustainable manner much earlier than we thought in our September forecast, perhaps towards the end of the first quarter of 2025 rather than in the last quarter of 2025. So inflation is falling.
So the negotiated wages, I think, actually had a pretty big jump in the third quarter. How does that complicate matters for the path forward?
Well, I think that reflected backward cases like wage negotiations in Germany. But we expect that to fall in the months to come. So we thought it's one blip, but not a permanent increase.
Governor, in the ECB policy statement, there's been for a while a reference to rate saying sufficiently restrictive for as long as necessary. Would you drop that language come December?
Well, we discussed these things in the Governing Council. Nobody can say before.
But it seems like things are changing. I'm trying to understand basically how you would do it and how you see the way forward.
Maybe the time has come, but these things are being discussed in the Governing Council after a very careful examination of data. We are still data dependent. We examine all the evidence. But we are in quite restrictive territory now. It's true.
Governor, talk to me about how much we should worry about central bank independence, especially coming from the U.S. and the worry that because of President-elect Trump's certain words about Jay Powell and about the Fed, this would also then migrate actually to potential concerns in Europe.
It is a very important issue. I think even more important than tariffs. I think governments did one of the best things in economic policy in the past to give central banks independence. So if we backtrack on this, it will be tragic, I think. Jay Powell is an excellent central banker, so it wouldn't be advisable to intervene in the independence of the Federal Reserve. That will be an even bigger mistake than tariffs, I'm afraid.
And this would have huge implications, actually, for the rest of the world.
Oh, yes, of course. Of course. Both for other central banks, but also for the markets, for the bond market.
Do you
but
believe...
I don't think it will happen. It's my estimation.
Governor, do you believe, I mean, again, we talked, and you talked so eloquently about these uncharted territories, that there is a real role for the markets and for bonds to try and keep everything in check, including, central bank independence? The market would be the first to react to any such event.
But we don't want to arrive at this point. It will not be nice. I mean, we don't need to invoke market turbulence in order for governments to understand that they should not intervene in central bank independence.
Governor, as always, thank you so much for your time.
Thank you. Thank you very much.
Very wise words. Yannis Stournaras, the governor of the Central Bank of Greece. Now, coming up, the renowned investor Carson explains his latest short position, despite the company in question being defended in some quarters. That's next, and this is Bloomberg. Welcome back, everyone. Now, short seller Carson has said he's shorting the shares of cosmetic brand Elf Beauty. Now, Block says he suspects Elf Beauty has overstated revenue in recent quarters and that a buildup in the beauty company's inventory was due to lackluster sales. Now, a representative for the beauty company did not immediately respond to a request for comment. Elf Beauty has been defended by Piper Sandler, with an analyst at the investment bank saying Elf Beauty's inventory build is not a new development and it remains confident in its overweight thesis. Now, shares in the company dropped as much as 16% in yesterday's session after the announcement before pairing losses, and actually shares a little bit lower, I think, in pre-market trading with the light trading volume. Now, Carson of Muddy Waters joins us now to discuss all of this. Carson, so good to speak to you, and actually so good to have you in London. There's a lot we need to talk about. But even before you announced this short, Elf stock was down some 44% from its high in June. So why is now, you think, the right time to place the bet?
Well, obviously, shorting it in June would have been more opportune. But, I mean, for us, in late summer, early fall, that's when we stumbled upon Elf. And what was actually the catalyst for us looking at it, one of our analysts got curious because they'd read an article, there were a bunch of articles in February of this year comparing Elf's stock performance to that of Nvidia and showing that Elf had actually outperformed Nvidia for 5 years. And so there was all this hype around the stock. And so our analyst, this is strange. This is just a cosmetics company. You know, the other company is an AI company, and I get that. So first thing they did was pull up import data, just, kind of whatever, just to see, and saw that the imports had crashed starting 3 quarters ago, had crashed by 2/3 from the prior quarter, and yet sales had maintained and inventory was building. So it was an atypical situation for us because normally with a short, we'll have a sense of where the problems are, but we have to dig to really understand them or flesh them out. But here, the problem was staring us in the face, and so the question was, what are we missing? Like, can this be this obvious?
But, I mean, they previously said that the recent buildup in inventory was intentional, right? Because they were getting ready for an increase in customer demand. So why don't you believe them?
So what we think happened, okay, so they're on a March fiscal year. So if you go back a little bit, about 4.5 quarters ago. So we think Q2 fiscal 24, they were expecting a lot of sales, and they had built up inventory in anticipation of that. And we think that sales must have hit a wall in Q2 of 24, fiscal 24, and they got stuck with a bunch of inventory. So they then told the market when they reported numbers and the inventory had gone up significantly, they said, well, most of that bump is because we've changed the way that we're sourcing inventory. We're now taking ownership of the inventory in China, and so now we're showing another 37 million in inventory on the water that we previously wouldn't have shown. Now, our research leads us to conclude that that was a completely false statement, that they have long generally taken ownership of the inventory on the China side, so their accounts, their inventory accounting should have always been consolidating the on-the-water inventory.
Right.
So what happened then, so now they have this excuse. We don't think the sales really picked up for them in Q3, fiscal Q3. So by the time they got to fiscal Q4, I think they slammed on the brakes in terms of buying new inventory because they're trying to run down the existing inventory. But even after the imports cratered by, again, 2/3, which that pattern has held for 3 quarters, their inventory balances keep climbing. And since about 80% of what they sell in the U.S. is imported from China, it seems like these two things cannot both be true. You cannot have 3 quarters of crashed imports and rising inventory levels.
So we have sent many emails. We are trying also, I need to, you know, this is a big disclaimer. We're trying to get actually the ELF side, which we haven't heard anything back yet. But have you had any engagement with the company itself of regulators after your announcement of short selling yesterday?
Okay, so we don't comment on discussions with regulators ever, but or whether they've occurred. But in terms of ELF itself, a lot of times when we're looking at a company, we will speak with the company. Now, we don't say we're muddy waters, because if we do that, we're obviously not going to get the version that every other investor in the market gets. So we have spoken with ELF's internal IR, and we've asked questions. And
yesterday, after the short selling, or
before? Prior to it. I mean, so we asked about the taking title on the China side, and you know, we received basically, you know, we asked them to follow up by email, and because there was no good answer on the call, and the email we got back was a word salad about like, yeah, we just changed the timing on it.
What's your price target?
Oh, we don't do. I mean, the problem is, like, just, you know, because I don't want to make it sound like I'm copping out here, but when you know that a company's accounts are problematic, okay, when you can tell that from the outside, it's really not possible for us to know the full extent of the problems. So I can seldom sit here and tell you about a company that we're short. Like, this is what I think the real financials are. So we think they've over the past 3 quarters, we think that they've overstated probably somewhere from 130 million to 180 million of revenue. I can make arguments as to why that's conservative. I would think that this could have predated the period that we're able to identify. I don't know. So when there's rot, you know, when we perceive rot, we just can never tell how far it goes from the outside.
Okay, and again, we have reached out to ELF. We haven't heard back. You did a parallel. You were talking about a parallel that you think was unfair between Nvidia and ELF. What would it take for you to short Nvidia, given where we are right now?
Okay, so, all right, look. So I'm among a group of people who believe that when you're looking at the largest companies in the S&P 500, that the fundamentals don't really matter, because the structure of the market right now is such that they keep receiving flows. So you have the target date funds, right? These are retirement funds. Every month they are buying structurally, and the largest companies in the index get the most flows. And so what ends up happening there, okay, if you believe in this theory, is that even though technically the float might be this, as a larger percentage of that float is actually passive, Passive will never sell until it gets outflows. So long as there are net inflows, you effectively have these ever shrinking, squeezing floats in the stocks that are, Mag 7. And so I don't think fundamentals fundamentals only matter on the margins with something like Nvidia, with one of those really big, large weightings in the S&P.
It would take a lot.
There's no point. I'm telling you, I see no point. For years, I've seen no point in shorting Tesla. We used to be short Tesla. We had crash puts on Tesla that we funded by going long the converts and clipping the coupons and buying the crash puts. Those almost paid off in 18, got pretty close. But other than that, like I've long said, I wouldn't short Tesla either. And it's a similar situation to Nvidia. It's such a large weighting in the S&P. It's constantly getting flows. So, yeah, what would it take? It would take it not being one of the largest companies in the S&P. So, in other words, post the best time to short it is when I would consider shorting it.
Okay, Carson, thank you so much. Carson Block from Muddy Waters Capital stays with us because I have 1,000,001 questions to follow up. This is Bloomberg. Welcome back, everyone. Still with me, Carson Block of Muddy Waters Capital. Carson, thank you so much for sticking around. We were talking a little bit about Nvidia and what would it take for you to short it. You said almost nothing if it's part of the Mag 7. Does the Trump administration change things for short sellers?
Well, it's interesting because I realized a long time ago that Elon Musk had identified the populism of the moment at about the same time that Trump had. And Trump harnessed that in 2016 to become president. And Elon, the way that he harnessed that populist sentiment was by creating this us against them being short sellers narrative that really helped propel Tesla's stock price upward. And so it's not a surprise then that these two are now, Trump and Elon, are pretty aligned. So again, Elon's market populist playbook is to blame the short sellers. Now Trump has a company that's public, that's named after him, symbol DJT, well, the ticker, DJT. Yeah. And he's already used Elon's populist playbook, blaming short sellers for the stock going down. I'm sure he doesn't believe that, and I don't think Elon ever really believed that short sellers, were keeping a lid on Tesla either. But I don't know how far Trump goes with that, right? I mean, so we're going to we've already had some rhetoric. We might have some more anti-short seller rhetoric. I don't know if it's going to go.
Or you just don't know?
Look, Trump hates regulation. It's a question as to who's going to head the SEC.
Yeah.
I doubt that, and I think the Trump SEC is going to roll back a number of regulations. Now, there was a recently promulgated regulation that forces fund managers to report on their short positions monthly to the SEC.
Yeah.
The reporting is non-public, but I doubt that they're going to try to roll that back. Yeah. But I don't know. I think the other issue that we have to think about as short sellers, though, is enforcement. Right. I think, generally Republican administrations tend to be lighter on enforcement. I mean, even under Biden, enforcement against corporates has been, from our perspective, as I've talked to other activist short sellers, has been lacking, severely lacking. So will that pick up under a Trump administration, especially with Matt Gaetz running DOJ? I wouldn't bet on it.
Yep. But
we'll see.
Carson, you have to come back on also to talk about the bull market. Carson Block from Muddy Waters Capital. Well, that's it for today. Up next, Bloomberg Brief. Manus Cranny, Danny Berger in New York, and this is Bloomberg.